just review the NSE's performance for us. We've seen it lose over 110 points today, and we know that in general, the all-share declined by about 3.9% in the last week.
Yes, you're right. The market was down about 0.5% today, and losses were scattered across the sectors. Two of the top banks were down. We had First Bank down, and also we had Nigerian breweries down. NBC, Nigerian Bottling Company, was down. Also, Julius Berger was down. And so, as you can see, losses were indeed across all sectors. This is the 9th day of losses, and the last time we saw losses in this magnitude over 9 days was sometime September 2009. So it's clearly not good times for the index. But I think if you look at it in a broader context, frontier markets have been down generally. If you look at the MSCI Frontier Market Index, has been down 9% year to date. In the past month, it has been down 2.3%. And when you have a market like Nigeria, which has done well, if you look at January, you won't rotation is not unexpected, and so you have people taking their profits and then rotating to other markets, which still present some value. Apart from that, you have corporate results that have not been really exciting, especially from the consumer side. You have results like flour mills, Dangote Sugar have not come in very strongly. You have inflation up, and there is risk that the CBN might tighten for that decreasing liquidity. And the MENA crisis too. Of course, Nigeria is not Libya or Egypt, but with the election coming to the fore, you just expect people from outside to be more cautious on the market.
I mean, you spoke about the, profit taking as well as asset allocation. So in a market like this, where do people put their monies? Are the food and beverage sectors looking a little bit better than some of the industrials and the banks?
It depends on your present asset allocation and your target, of course. We still see value in the banking sector, although there are shocks here and there. There is still some lack of clarity concerning the 1% loan loss provision that the Nigerian Accounting Standard Boards want the banks to take, and how that might affect the books. Also, we don't have enough clarity on the mergers and acquisition front. Yes, we know that there are MOUs in the pipeline, but we want to know who is acquiring who and at which terms. And so while the banking sector presents a lot of value, I think we need extra clarity. Concerning the consumer goods, there have been pressures from rising commodity prices over the past 6 or 7 months, and that has affected the companies, some of the companies in those sectors rather. But we still have positive views on companies such as Nestle, on 7up, and we think they give good values to investors at this point.
Obviously, results season now, and your area of specialization, the brewery and food sector. Nigerian brewery results, were they in line with expectations?
Yeah, they were largely in line with our expectations. Turnover grew 13%, bottom line grew 8%. But I think it would be good for you to focus on the fourth quarter. The fourth quarter was very strong. Turnover grew 22% year on year. You had profit margin and PAT margin at 16.7%, which was much stronger than 14.5% in the fourth quarter in 2009. And so that was a strong result. You have Nigerian breweries, which is coming out from a season where there was some market loss to the major competitor Guinness, but over the fourth quarter, I think they gained some market share. The stock has been going down in recent time, basically due to a disappointing dividend payout. Dividend payout was about 60%, which was not in line with the company's guidance of about 100%, and is lower than dividend paid over the last 3-4 years. And so I think that has elicited some pullback in the stock. In addition to that, the funds that have been saved from the lower than expected dividend payout, there has not been enough clarity on what the funds are going to be used for. And so investors are kind of wary towards the Nigerian brewery stock at this time. But we still think it's a very strong story in the beer market that has grown 9% over the last 10 years, being the top brewer with almost 6% market share. It's no joke, and it's a big deal. And we think Nigerian brewery is going to capitalize on that status to present good results.
And Seun, very briefly, are we likely to see a shake-up in the market? Obviously, we've seen the consolidation that's come through from Heineken's 5 acquisitions. We also know that SAB Miller is planning on investing about $100 million in a greenfields brewer. All those kinds of things, are they likely to just create a little bit more excitement in the sector?
I mean, yes, more excitement, but SAB Miller's acquisition plans for expansion should be put into perspective. They're just going to add about 500,000 hectoliters to their capacity. I think with everything, they should not have more than 1 million hectoliters. That is less than 10% of what Nigerian breweries has on ground. And so while they are cementing their presence on the local market, I don't think they can really upset the big players for now. But SAB Miller should be looked at in the broader African context. It has beer volumes that have grown at 8% for the whole of Africa in the last 10 years. It has other markets like Angola, where it's constructing a 2.5 million hectoliter brewery. And so it's looking at other opportunities in Africa and not just Nigeria. I think unlike what we expected, it's not just going to come and hit the ground running. It's going to be a steady entry into the market, and we look forward to it. I think it's going to be exciting with time, but not as fast as we initially expected.